Hello super investors, welcome to another video on Finance with Lance. Now in today's video I'll be discussing my top 5 Jamaican stocks to watch for the rest of 2025. Now this list is not exhaustive, but these stocks are certainly some interesting picks you can have a look at. Now if you want to make serious investment decision, please contact your licensed financial advisor, because everything in this video is for educational purposes. Now stay tuned as we bring forward these stocks. Now number 1 on my list today is Jamaica Broilers Group Limited, JBG. This company is a leading agribusiness company in Jamaica that engages in poultry production, animal feed, manufacturing and related businesses. So in recent times this company has faced numerous operational and financial issues, particularly with its US operations. This company in the quarter ending January 2025 reported a consolidated net loss of $1.1 billion, the first in its nearly 70-year history. And this was largely due to a $13 million loss in US segment, stemming from unrecorded invoices and poor expense management. Now, you know Jamaica Broilers. Popular brands include iPro, Reggae Jammin', Bestest Chicken. But this company currently trades at a 52-week low of around $26, somewhere around there, and at a PE ratio of around 7.5 to 7.8. Now, nothing beat a turnaround story, and this could be an opportunity for investors, but at the same time you have to be cautious. So it's a company to watch and see where things go in the near to mid-term future. Now, as Jamaica Broilers navigate this challenging period, you have to remember that this company has always been a solid performer, and the company is making turnaround efforts. So I want to see where things go. And you know, this company, the core operation in Jamaica is doing well. It's mainly the problem is mainly with its US segment. So we want to see where things go. The low valuation in terms of PE might be a opportunity. I'm not saying it is, but it might be. So we have to dig deeper and look how the company can turn around. Now, number 2 on my list today is NCB Financial Group. Now, this company is the largest financial conglomerate in the Caribbean. Core operations include banking, insurance, payment services, and wealth management. Now, this company performance has dropped from the prior year by 74%. So the net profit has dropped by 74% if you look at the statements, financial statements. Now, some of the key drivers for the lower profits were because of lower insurance gains and investment activities, as well as other operational and credit impairment. Now, this company has undergone leadership changes in 2024, and the company is going through a realignment in several goals and strategic focus. Now, this company was always one of the best performing stocks on the Jamaica Stock Exchange. If you go back a few years ago, the share price has been coming from a high of $200 now to $45. No, this is a very far drop. No, so this is a company to watch in the near future, the midterm. So this company surely made it on my watch list. Now, number 3 on my list today is Dolphin Cove Jamaica Limited. This company is a subsidiary of the Dolphin Company, known as Dolphin Discovery Group in Mexico. No, the parent company, Dolphin Discovery, initiated a volunteer bankruptcy in Mexico, and this is to restructure its debt. So the company is facing liquidity issues, and it want to negotiate with its creditors. No, this is troubling for Dolphin Cove Jamaica in some sense, because this has created some uncertainty, and this has caused the stock price to fall into a 52-week low. No, around $11.18, somewhere around there. So this is very troubling. But the company at its core in Jamaica is not facing any those type of issues. It was always a strong dividend company. So the company in itself at the core Jamaica is okay, but the parent company is facing issues now. In addition to that, there seem to be some inboard fighting on the board of directors, and there's some issues going on, underlying issues. So this is a company to watch. At its core, the business of Dolphin Cove is not doing bad, but there are certain issues with parent company and the board of directors. Now, as you know, the company primary revenue streams are admissions and encounters with the dolphin, when they interact with the dolphin and the admission to Dolphin Cove. Also, they do merchandise and photo sales, food and beverages, tour operators, and they have partnership with various companies. So this company at its core is okay. Now, if we take a look at Dolphin Cove last quarterly report, the company had made profits of up to $2.3 million at the time, and revenues of $12 million. Now, Dolphin Cove also must highlight as another issue. So there is 3 issues with Dolphin Cove. The next one is that their audited financial is a bit late for the second time. So you know the company is at risk of being suspended. Now, my wish is for this not to happen, but let's see how it goes, and I wish they could sort out this issue. So let's watch and see how things play out. Now, fourth on my list today is Mailpack, and the core business of Mailpack is to handle shipping for Jamaicans who want to buy products which is shipped to a US address, and the company handle the custom clearance and the shipping and the final delivery. No, I believe that this industry has a lower barrier to entry, but Mailpack has made certain strides within the last year, and this is due mainly to inorganic acquisition. So they acquire a company called Mailpack Express. Now, since then, the company revenue has increased by 53%. Now, I'm watching to see how this will play out. Now, this is inorganic growth, so, and there are a lot of players in the local industry. So I'm gonna watch and see how this plays out. The company is one that has been a very consistent dividend payer over time. So the company is one that I'm going to watch to see how they compete and try to maintain a dominant position with all these new companies entering the market. So definitely want to watch out for in the coming quarters. Now, number 5 on my list, I'm finally here, is Regency Petroleum. Now, this is a fast growing energy company in Jamaica, and they focus on distribution and retailing of petroleum products. Now, the company was recently listed on the Jamaica Stock Exchange in December 2023. Now, the business model is really retail gas stations serving motorists and local communities, wholesale bulk fuel supply to commercial, industrial and institutional clients, and the company recently expanded into new services such as a project in Spanish Town Road, where they constructed, I believe, a new station. Now, The company has been on a high expansion drive, and the company has a tax incentive as it's recently listed on the Jamaica Stock Exchange, so it has up to 10 years. Well, 5 years of no tax, then 5 years of 50% tax. So this is an opportunity for fast growth. Now, the risk I see mainly with this company is a liquidity strain because of the high capital spending. This could stress the cash flow, as the company posted net current liabilities and a reduced cash position in its recent quarterly statements. Now, also the company has increased its bad debt provision significantly, but I guess this is due to its high growth in revenue and net profit. So with more customers and higher revenue come more bad debt. The company has a short-term debt maturing soon, so the company is really on a drive. And some of the key things I noted when I was looking at this company, the good things are that the revenue was up 76% year over year, net profit was up 88%, and gross profit, the margin has doubled. So also the equity has been up also. So retained earnings is up. Asset has grown significantly from 506 million to 743 million. Audit opinion was clean. No misstatement or issues. No, when it comes to the bad side, no. But I don't think they're so bad, but there's still a risk. So as I said, the net current asset has increased significantly. That might provide a little liquidity stress. Cash balance has decreased from 67 million to 12 million. So I'm watching the next quarter coming up, which is next month. The report, I think the report should be available. And the admin expense has risen faster than the sales. So that's one thing I've noted also. So the expense has risen very fast. But I will watch and see in the next report. Now, for bad debt, the provision has risen from 625,000 to 5.1 million. So these are things to note for Regency Petroleum, but at a high growth rate in those areas, 80 plus percent. This is certainly a high growth company to watch, and if this can be maintained, I think this could be a good company. Now, when I check out the PE ratio, it was trading at a ratio of 52. Now, that is quite high for the overall stock market average, which is around 15. That is very high. But what I will look into is, can the company grow into this relative valuation? Because that's one thing. If the company can grow at a high rate where I will say the PEG ratio, so the PE to the growth, if the company can grow into this, it would be a wonderful buy. But if it cannot, it will be overvalued in my opinion. So this is a company that I will watch. Definitely I will dive more in future videos. You can stay tuned and watch out for the future live and longer format videos. Now, tell me something now. Which stocks are on your watch list? I want to know. Tell me why. I might be interested. So drop that in the comment section, and it might be a company I could look into in the future. So drop that. Please share and like, subscribe, tune in for more. I'll see you soon.